It has been quite an active year, and what stands out the most, I would say, is the resiliency and the agility of the entire LYB team.
What should really give investors that confidence in the company, especially in a challenging market like this one?
We continue to prioritize and do the trade-offs between short-term, medium-term, and long-term. But we've been very focused on our portfolio transformation, the divestiture of our European assets still well on track. We've executed on our cash improvement plan as market conditions were showing weakness in the overall market. We took the proactive step to make sure that we would conserve as much cash as possible. We controlled all the controllables, so we were very proactive in terms of the cash improvement plan, managing our working capital, our capital expenditure, reducing our fixed costs.
Welcome to the LYB podcast. I'm Deepi Sidhu. Today, I'm joined by Agustin Izquierdo, Executive Vice President and Chief Financial Officer here at LyondellBasell. It's been a year since Agustin first joined us on the podcast when he stepped into the CFO role, and that conversation gave us a chance to get to know him a little bit better. So in this episode, we look back on that first year, the choices made to navigate market changes, and how the company is positioning itself for the future. We'll cover capital allocation, balance sheet strength, and what leadership requires in uncertain times. Let's get started. Welcome back, Agustin.
Thank you very much, Deepi. Happy to be here.
Nice to have you again. We spoke a year ago on the podcast, like I said, when you joined LYB as CFO. Since then, the market has been anything but easy. So as you look back on that first year in your role, what really stands out the most to you?
As you said, it has been quite an active year, and what stands out the most, I would say, is the resiliency and the agility of the entire LYB team. We've had a number of changes throughout last year, trade flows, volatile feedstock prices, adjustments that we have, as you mentioned, we had to do to our capital allocation. And the team was able to react very quickly and balance the short-term, the medium-term, and the long-term priorities. So I'm really proud, of course, of the entire LYB team, and the finance team in particular has done a great job at prioritizing and being able to be agile and take the right decisions.
And as we look back on that first year and the achievements in the annual report, what should really give investors that confidence in the company, especially in a challenging market like this one?
It should give them the confidence that we continue to execute on our strategy. We continue to prioritize and do the trade-offs between short-term, medium-term, and long-term. But we've been very focused on our portfolio transformation, the divestiture of our European assets still well on track. We've executed on our cash improvement plan as market conditions were showing weakness in the overall market. We took the proactive step to make sure that we would conserve as much cash as possible. So we launched the cash improvement plan, which we overachieved significantly. And then in addition, we also took the opportunity to recalibrate our dividends to make sure that LYB was in a strong position and it could be sustained from our cash flow generation.
And let's talk about that decision to recalibrate the dividend. Can you walk me through the factors that went into that decision?
First and foremost, the decision was to keep LYB's balance sheet in the strongest possible shape so that we are a good, viable company for the future. Investment grade also allows us to have access to capital, to have lower rates when we go to the market for financing, for growth. And so as investment grade is paramount for us. So that was one. The other is we controlled all the controllables. So we were very proactive in terms of the cash improvement plan, managing our working capital, our capital expenditure, reducing our fixed costs. And in addition to that, the dividend became outsized with the cash flow generation that we had projected for the next 2 years or so. And we took, along with the board, the decision to recalibrate the dividend to such a way that allows us to navigate this cycle for the next 2.5 years and have LYB in a very strong position. And it's a dividend that can be fully supported by our cash flow generation.
You mentioned protecting our investment grade balance sheet. For listeners that are unfamiliar, can you tell us a little bit about what that is?
Sure. And maybe the best way to explain it is through an analogy. Just, for corporations, just like for individuals, having a good credit score allows you to get better loans at lower rates. And it's not different for companies. When you're investment grade, it just shows or demonstrates that you have a higher financial capacity, that your cash flows allow you to take on more debt or liabilities, and that you will have the ability to repay it. So if you're investment grade, You get access to more liquidity, loans in better terms for longer durations. It just allows you to have that additional flexibility.
So with that in mind, can you tell us why the company has really prioritized it?
Investment grade balance sheet is very important for us. It is actually the bedrock of our capital allocation. And investment grade allows you to have liquidity, access to capital when you need it the most, and also to have it at attractive rates. It is also a signal to our customers and stakeholders, suppliers, that we are a company that will be financially very disciplined. And overall, it allows us to operate in a more flexible way as well as we navigate these cycles.
The cash improvement plan was a major focus in 2025. What did it deliver for the company, and how has it positioned LYB as we move forward?
Sure. The cash improvement plan was actually a great example of how we navigated the cycle and how we reacted quickly to the difficult market conditions at the time. So when we officially launched the program, it was for $600 million in 2025, basically broken out in three different buckets: $200 million from fixed costs, $200 million from working capital, and $200 million from capital expenditures. By the end of 2025, we were able to over-deliver, and the program reached $800 million, again, through very disciplined management in all those three categories. For 2026, we announced another program of $500 million, so the total for 25 and 26 was increased from 1.1 to 1.3 billion, and in fact, we have very good visibility to overachieving the 500 million. And again, kudos to the LYB team for reacting quickly, especially in terms of working capital management, CapEx and fixed costs. All these categories and changes require a lot of work, acting differently and reacting, again, also quickly to very dynamic market conditions.
Yeah, you said it. And the industry as a whole has been through such a tough cycle. And LYB's really had to, like you said, take some decisive actions really to navigate the cycle. So as CFO, what have you learned about leadership during times like this?
You have to trust your team, and in terms of uncertainty, I would say over-communicate, provide context as to why we're doing the changes or the actions that we're taking, what are the trade-offs, short-term, medium-term, long-term, and always keeping in mind the long-term and what decisions will position LYB to be the best company for the long run.
It's been a busy year for sure, Agustin. We thank you so much for the time. And that's going to wrap up another episode of the LYB podcast. Visit lyb.com for the latest company news and more. And be sure to subscribe to the LYB podcast so that you don't miss a future episode. Thanks so much for listening.